Okay, everyone. Today is September 1st, 2021. Haven't made any videos for a while, but we're back again with two really, really special guests that are doing awesome stuff in the cryptocurrency space. Mike Komaransky, who predates myself even to crypto, and then Mark Lamb, but I'll let them give their own introductions. But we'll start with Mike since he was involved in crypto long before myself.
Hi, everyone. Thanks for having me, Roger. Good to see you again, Mark. Hello. My name is Mike Komaransky. I am currently the director of grapefruit trading, which is, among other things, an OTC desk in crypto. Before that, I was at Cumberland. And before that, I was just a big Bitcoin fan. And I've been a derivatives trader, financial trader since 2001. And it's sort of morphed into being a crypto trader and a crypto derivatives trader as well.
And so correct me if I'm wrong, but I think Mike's being a little bit overly modest there. So for those that don't know, DRW is a big, giant trading firm. And Mike basically pulled them into crypto and got them started in crypto. And it was you that set them down that path. Is that correct, Mike?
That is correct. And they're still going, but I have nothing to do with it anymore.
Yeah, you got it started, and then you're planting your seeds now with your own company, Grapefruit Trading. So and then,
yeah, and they're a competitor of mine now. It's I shared this with Mark. If you've ever seen Bridge over the River Kwai, I don't want to give away the end, but basically the guy spent the entire movie building a bridge for the Japanese because he was he was imprisoned in a prisoner camp, and at the end, the Japanese train goes across, and he looks at it and he realizes that he has to destroy the bridge, and he says, "What have I done?" I feel the same way. Like, I've helped build Cumberland up, and now I have to compete against it.
I thought you were comparing cryptocurrency with the legacy banking financial system as well. So
perhaps that's a bigger train to take down.
One train at a time. And then Mark Lamb, I believe you got involved in 2012 in Bitcoin. Is that correct? Yep. And then give us a little bit more of your background so people know that you guys aren't just some, late Johnny-come-lately guys to crypto that are trying to make a quick buck on some, ICO or token pump. And you guys have been around for a long, long time. So Mark, take it.
Yeah, so I got into Bitcoin in 2012 when I was sort of looking for alternative currencies and had some background in computer science and cryptography. And
you were 9 years old at that point, is that right?
I was 19 years old, yeah. So I bought as much as I could. I took out loans, bought more crypto, more Bitcoin. That was the only crypto at the time, and basically started CoinFLEX, which was the UK's first Bitcoin exchange. I had been trading sort of OTC and providing liquidity to people in the UK in Bitcoin, and started realizing that there was the need to sort of automate this process and create a formalized exchange. Created CoinFLEX. We were the first exchange to do provable solvency, so we were the first exchange to be audited on the blockchain. And I think to this day, CoinFLEX is one of the only exchanges to actually do this. And CoinFLEX became one of the main places to buy Bitcoin in the UK. And a few years ago, I basically realized from lots of things that were going on in the space, conversations with Mike and other people, that derivatives were going to take over everything in crypto trading, and that this was going to be, multiple orders of magnitude bigger than spot markets. And so created CoinFLEX, which was sort of a spin out of part of CoinFLEX, and moved to Hong Kong. And we've just been building ever since, and we're now doing lots of volume and
hundreds of millions of dollars a day in volume recently. And so since I think a lot of the people that probably watch my channel are interested in libertarian stuff and crypto, a lot of them will have no idea what a derivative is. So maybe you can explain a little bit about why you're so excited about derivatives on your exchange.
Yeah, so derivatives are great because they allow people to use leverage. And a lot of people, when they think about leverage, they think about what people in crypto often term degenerate gambling or effectively very kind of reckless trading. But what we've realized is really derivatives are powerful And leverage is powerful because it can also just make capital more efficient. So you can use it for very long-term, very sustainable and responsible ways of trading as well, where the leverage isn't used as a way to be reckless or careless, but it's used as just a way to make your money more efficient and earn a yield or an interest rate on your capital. So we're really excited about derivatives because they provide people a more capital efficient way to trade, a more capital efficient way to kind of monetize their assets, and they effectively let you do more with your money. So kind of simply put, the layman's explanation is they let you do more with your money in terms of the way that they're structured, because you don't have to put the full dollar amount of your capital down. So it's very similar to the value of a mortgage or any type of leverage in the traditional world. And these, these are products, leverage, various forms of leverage products are products that are broadly useful to pretty much the whole world. So
anything to add, Mike, as a professional trader for years and years?
I think that your original question is, what is a derivative? Why are they useful? And I would say it's like a very easy way to bet on the future of a product. Derivatives have existed for a long time. I want to say like their biggest point of inflection in the entire world is when the agricultural industry took advantage of them. So people knew that they were going to have corn at the end of September, but we're in the middle of May and they have to cover costs of farming. So how do you match up the cost of farming with the income you're going to receive in September? And futures were born.
Yeah.
Physically settled futures, and which is what CoinFLEX has.
And if I can add a little bit to that too, I think the general population out there, they just assume like the economy, money, it just is. But no, all these things are actual technological inventions, just like, the transistor or the iPhone or air conditioning or whatever else, those were inventions. All these financial tools and financial products are inventions as well that help improve the standard of living of people around the world. Just like you said, if you know you're going to have corn at the end of the year, but you don't know what price you're going to be able to get for it, then you can have a futures contract to figure that out today. So these are important technological inventions, and Mark is putting some of these pieces together in new ways, I think, for the crypto world that to make them even more useful to people. Is that agreeable with everybody there?
I'm super privileged to have seen the invention of certain derivatives, things that didn't exist 20 years ago. I've seen it at DRW. They've created derivatives of their own, but within crypto, what's a very important invention in the derivatives world in crypto? BitMEX came up, I think, with the very first perpetual future, which is, when we talk about futures, we're talking about, okay, I'm going to deliver you corn in September. That's very easy to understand. With Bitcoin, you could talk about what is the price going to be in September. That's easy to understand. You can bet on that, and whether the price goes up or down, you have to pay off your bets that way. BitMEX says, okay, well, let's have a future, but instead of ending in September, let's just let it end never. And based on the price movement of the future versus the spot, we can exchange money that way every 8 hours or every hour, something like that. So that was the invention of the perpetual swap. And that is the future that is most common in crypto derivatives. And it's an amazing product. It's very cool. You don't have to understand it, but it was invented within crypto, and maybe it'll make its way into the real world soon. It should, at least.
And I think that ties us into this AMM product that Mark has there. That is what kind of piqued my interest initially, because simple version of it is that it's a way to earn money on your crypto capital. The more complicated details, Mark's going to explain because he built the whole system there. But can you tell everybody about that's interested in making more money with their crypto?
Yeah. So our AMM is we took this concept of automated market making. Yeah, go ahead.
I was going to say automated market making is what AMM stands for. So basically, anybody can now be a market maker on CoinFLEX with this really useful platform that you've built. Please continue.
Yeah, so I think of it similarly to the S&P 500, where at some point in the history of stocks, there was no S&P, there was no index product. And so at that point, anyone who had enough money could go and buy 500 of the top companies in America. But the invention of indexing, the invention of the S&P 500 was a way to democratize the product or the concept of buying the best companies in America or in the world or in some region. And that concept is now how, $10+ trillion is managed today in equities. And I think the DeFi, or the decentralized financial kind of ecosystem that's been born in crypto, has invented this concept of automated market making. And what we've done is we've taken that and created the first automated market maker for futures. But really what this concept is it's saying, well, there's a strategy in traditional finance and in crypto finance as well, which is market making. You're being willing to buy something and being willing to sell something. And so you're putting up prices on electronic markets, moving these prices around according to specific logic. And typically this is done in a hedged way. So if I buy something on CoinFLEX, I might sell a similar product. If I buy a Bitcoin perpetual future, I might sell a Bitcoin perpetual future on Binance. And I'm hedged between these two exchanges. And what DeFi has realized, and what CoinFLEX has realized as well, is that actually market makers that are hedged can provide a certain level of prices and can provide a certain quality of markets. But actually there's another group, which is a much larger group, which is people that are willing to actually be long the underlying. People that are willing to buy exposure, buy Bitcoin Cash, buy ETH, buy BTC. Yeah, exactly. And so there's a group of people that are happy to buy something, and they might be happy to sell out of it at times, and they might be happy to take on these exposures and these directional leans where they're just getting longer of something. They're increasing their exposure, or they're getting exposure, what have you. And when you combine these two, this concept of market making and this concept of getting exposure, you actually create a really high yield way to get exposure, or way to hold your exposure in an asset. And so instead of just buying $1,000 worth of BCH, you could buy $1,000 worth of BCH and stick some of that in this AMM and put a range of prices that you're willing to buy more on top of that. And then all of a sudden, you've got, at the end of the year, BCH goes to $2,000. Maybe instead of doubling your money, instead of having $1,000 worth of BCH that's now worth $2,000, you might have outperformed that. So there's a lot of crypto investors that are looking to hold crypto and they want to outperform crypto. There's a lot of dollar holders that are looking to earn yield on their dollars, and they're happy to be exposed to crypto. And there are a lot of people with these types of desires, and they're all desiring yield. And what traditional finance shows and what crypto trading shows is that if you're willing to put up bids and offers, when you buy, you sell out of it. When the price goes lower, you buy a bit more, and then you sell out all the way back up. If you're willing to do that, because crypto is so volatile and so high volume, and there's so much demand to take that liquidity, you can actually make quite a bit of money. And so this has been something that we think really this could scale to 10% of the global population, or 20% of the global population actually becoming market makers, where right now, in terms of the global population, probably less than 1% of 1% are market making. And so, that could be a massive increase in scale of market making, which is something that, Mike Komaransky's been doing it for a while, and he can tell you, there's a lot of people that are doing it. They're making a lot of money. It's a great space, and it could expand, 10,000 times in terms of the capital and human talent deployed into it. So that's what we're trying to do.
And so I'm going to explain that in a little bit more simple way, and jump in anytime if I get anything wrong. So basically what's going on with this AMM platform on CoinFLEX is you can deposit your crypto. So most people watching this will be interested in Bitcoin Cash, but you can do it with Bitcoin or Ethereum or Ripple or like Dash and like a whole bunch of other things out. There's like maybe 20 different coins or something that are supported now. Anyhow, if, you can deposit whatever you want there, and then you'll say, okay, the current price of Bitcoin Cash is like $650. you'll say, okay, I'm willing to do market making from between $750 and $550. And it'll just put buy and sell offers on the order book there. And as the market goes up and down and ebbs and flows, you wind up eking out a little bit of profit on each of those trades there. Or the aggregate of those trades. And so part of the profit will be in dollar terms, but the other part of it is you get a rebate on because you're just being the maker for each trade, not the taker, which means you put the order on the order book and you wait for someone to take the other side of that offer. And on CoinFLEX, there's two different ways to pay the CoinFLEX fees. You can pay it in whatever the asset is, or there's the underlying Flex coin. And if you pay with Flex coin, it's cheaper than if you pay with whatever the other asset is in the trade there. So all these people that are trading on CoinFLEX are buying Flex coin. And so anytime they take a trade against your liquidity that you've put on the order book, you get part of that Flex paid back to you. And at that point, you can then either keep the Flex thinking that it'll go up more, or you can sell it into whatever other cryptocurrency you want. So at the end of the day, let's say you start your market making there and Bitcoin Cash was 650. You put a range of 550 to 750. In 2 months from now, the price has gone up over 750. You can then close out your whole position. You'll still have your original however many Bitcoin Cash you put in, but you'll also have earned some dollars and you'll have earned some Flex coin. And again, you can do whatever you want with the Flex coin there. You can sell it for more Bitcoin Cash, Ethereum, Dash, Monero, whatever. I don't know if you have Monero, but any of the different coins that are listed on the exchange, or you can just hold Flex. We've seen Flex in the last, month and a half. It went from like 20 cents to almost $2 now as the volumes on the exchange really exploded, because the more people that are doing the automated market making, the more demand there is for the Flex coin. There's a limited supply of about 100 million of them. And correct me if I'm wrong, I think you take 10% of the trade fees to buy and burn the Flex, and then the other 10% get rebated to the automated market makers, or
we do. So actually, there's a 4 basis point taker fee, and 3 of those basis if you're VIP 6, if you own 1 million Flex coin, the bare minimum is 4 basis point taker fee, and 3 of those basis points actually go to the AMM users. So 75% of that fee is going to the AMM users or any maker on the exchange, but AMM users are capturing a large percentage of the trades. Yeah, so it's basically 4 to 8 basis points, and 3 of those go to the AMM users. And we take 10% of our revenues and we burn them in Flex coin. And then we also take 10%, and we're about to launch a DAO, which is a way to stake Flex for a variable length of time, anywhere from 2 weeks to 4 years. And we'll pay that 10% as well to people that are staking Flex in the DAO. And there's also a 10% of profits and 10% of profits to DAO stakers as well. So yeah, the Flex tokenomics are quite skewed towards, the more volume that is done, the more revenue that's generated, the more Flex gets burned. But also there's a long-term staking reward for people that will be staking Flex on the Smart Bitcoin Cash blockchain, SmartBCH blockchain, in the Flex coin DAO, which is going live in the next few weeks.
And I don't think I'm asking for any private or secret information here, but there's 100 million Flex coin hard cap. You're buying and burning them with 10% of your profit. I think we can work out the numbers about how much is currently being bought and burnt on a daily basis equivalent, or are you able to say that?
Yeah, we're making roughly between, the volumes have been growing substantially and change a lot every day.
Over the last week.
Yeah, it's between $40,000 and $80,000 a day. So
of Flex that are being burnt, or it's 10%
of that. That's the number, 10% of that number. So we're making on some days it's over $100,000 a day in revenue. So it's
somewhere in the ballpark,
quite substantial at this point.
$5,000 to $8,000 to $10,000 a day worth of Flex, and so as that goes on, day after day, week after week, month after month, the total amount of Flex available becomes less and less and less. And as that happens, assuming CoinFLEX is still a popular exchange where lots of people are trading on it, the price of Flex is going to go through the roof there, because you have an asset with a limited supply and a never-ending demand, up. And so I bought my first BNB when they were like $5 each. Now they're for almost $500 each, and they have a somewhat similar model, I believe, to what you just described as well. So if you feel bad that you didn't buy BNB at $5, here you have another exchange that's doing something very similar with some pretty significant volumes, hundreds of millions of dollars a day in trading recently. I bought Flex myself because I think it's good. We're talking about it because I think it's cool. I like Mark. I like the products. I'm using this myself. And I thought other people would find this interesting as well. Just like previously, I made another video about options over at bit.com, which is a related company, but not a direct competitor yet, I don't think, Mark. But maybe there'll be some futures options there in the future as well. So,
yeah, I'll just throw in that the exchange is doing so many cool things, and there's lots of different ways to be involved. One is FlexCoin. That's sort of the direct way of betting on their success. I think there's some asymmetric returns where FlexCoin could 10x easily, if volume keeps coming in at the pace it's coming in. That's an easy bet. So I bought FlexCoin. My company's bought FlexCoin. Then there's other things like the AMM product, which it carries some risk, but you can be a market maker. We've talked about it for 10 minutes already, but it's a product that CoinFLEX invented. Nobody else has it. It allows you to be a market maker. My company, it requires programmers and traders and 24/7 monitoring to be a market maker. Now you can just click a couple buttons and you're a market maker just like us. So it's very cool access to the markets that you haven't had before. So there's that. Now there's flexUSD, which is an interest-bearing stablecoin. If you have dollars and for whatever reason they're in the form of Tether or USDC, get that out of there. Get some flexUSD because you can actually earn interest on it. And that interest is paid on chain.
Every 8 hours, right there into your wallet. People still pay me sometimes in the USDT or USDC. The first thing I do, and Mark will attest to this, I send it right over to CoinFLEX and swap it out for flexUSD because I lately been paying out around 10%, even 15% APR interest on it. So I can earn 0% with Tether and have a lot of counterparty risk there. I can still have some counterparty risk with flexUSD, but I'm still earning interest on it at the same time. So if I have to choose between counterparty risk no matter what and earning interest, I'll earn the interest on it too. So
we shouldn't leave this conversation without talking about the fact that you have a physically delivered future, which is unique to CoinFLEX. It's another thing that sets CoinFLEX apart. I don't want to go into the details of it, but all the other derivatives exchanges have cash settled futures, which are okay. They're very popular, but they're still prone to market manipulation. And that's one of the major benefits of CoinFLEX is the physically settled futures, so no one can mess with it. It's a very cool product. I think the world should take notice.
Yeah, I would say I've been pondering this part a lot, but I would say actually it would be very difficult to create an AMM without the fact that the futures are physical, because so if Binance implemented an automated market making system on their exchange, and they said, okay, anyone can just plop in bids and offers into the order books, put in large amounts of capital, and put that to work, you would have a problem. And this would be true of any derivatives exchange. So I don't mean to single them out too much, but you'd have a problem with perps that are cash settled where there would be a large weighting above the mark price, especially for some of these assets, from even small amounts of capital in an AMM, let's say tens of millions of dollars, would cause a large weighting above or below the index at times. And we notice this on the CoinFLEX perps. Sometimes our perps are 10, 20 basis points above the index for extended periods of time. And on the CoinFLEX perps, that doesn't cause hugely expensive funding rates because, in the end, the funding rates are determined by repo. flexUSD is a market maker in repo. And all the repo is really just a marketplace for dollars. It's a marketplace for leverage. But because that marketplace for leverage exists as its own marketplace, and we can just kind of, people can understand all of that or a little bit of that, however much they want, if they want to go through the documentation on the website, but they don't need to understand that in order to trade the products. But because there's a separate marketplace for leverage, and because flexUSD is providing liquidity into this marketplace, the funding rates are actually quite contained relative to what they would be on other exchanges if those exchanges launch similar automated market making products. So I think on many of these exchanges, you would have funding rates regularly flip to 50 or 100 or higher percentages APR, and the AMMs, I mean, people can see if they go to the transparency page on CoinFLEX.com, they can see the returns that AMMs are making. There's some pretty high APRs on there, but it is difficult for any amount of volatility to compensate for really, really aggressively high funding rates that are out of control. So I think that is one thing that the physical nature of our futures really, really significantly helps with is just controlling, as you say, the manipulation is a risk, and this is something that controls that risk on the funding rate side of things.
So long story short, if you have some crypto and you want to be long on crypto and you're bullish on it in the future, you can earn 20, 30, 40, even 50% APR on your crypto by doing the automated market making on CoinFLEX there. It's really been a big eye opener for me, and I've been spending a lot of time dealing with that recently, just because it's such a interesting way to earn yield on your crypto in a way that only exposes you to being obligated to buy even more crypto, which is something I would be okay with already anyhow. So if you're considering buying more crypto, this is a pretty interesting way to earn interest on your existing crypto.
And one of the results of it, one of the side effects is that Bitcoin Cash is now CoinFLEX is the exchange in the world where Bitcoin Cash is the most liquid. So if you need to get size off, if you need a tight price, CoinFLEX is now officially, I think, the most liquid. So an OTC desk like myself, if we have 1,000 Bitcoin Cash to buy, we don't move the market at all. We could just go click CoinFLEX buy and we're done. And some AMM is happy because they got their order filled.
Thank you.
We're happy because we got a tight price and we're not moving the market. That's awesome. Like, good for you,
yeah.
CoinFLEX. You've got one coin where you're the best. Now you should move to the others as well.
Yeah, I mean the nice thing, it feels pretty good because we know pretty much for a fact that if we just do what we've done with Bitcoin Cash to all the other coins, we will be the most liquid exchange. So obviously we're doing hundreds of millions of dollars. A lot of that is in BCH. We hope that in the future we're doing tens of billions of dollars worth of BCH volume. But also similarly, we can just go down to whales and large retail users and small retail users and tens of thousands, 100,000 people, and get them to deposit their Ethereum, deposit their Bitcoin, deposit their Monero, deposit all sorts of things. Well, Monero is not one we've listed yet, but deposit lots of other coins. And hey, we'll quickly become the most liquid venue for all of these things. And so, and one thing that is definitely for sure, traders love liquidity. So liquidity begets liquidity. We now see market makers that are not AMMs also quoting in Bitcoin Cash and trying to compete with these AMMs. And they're doing so because they know that, hey, if they get a position that they're stuck with that they have to get out of, it's really easy to get out. There's lots of liquidity. And so market makers as well that are traditional market makers love being able to make markets in a liquid market. And so they're coming to our Bitcoin Cash markets. And that just drives more volume as well. So it is this kind of virtuous circle where with flexUSD, people are winning from the AMM. flexUSD holders are getting paid interest from AMM users. AMM users are making money from volume on the exchange, and then CoinFLEX wins as well, which also means that FlexCoin ends up winning. So it's a very sort of virtuous ecosystem. And we just we'd welcome more people from the Bitcoin Cash space, from the crypto space generally, to just come and try out what we're doing here.
Any additional things you want to add or tell us about what your plans are for the future? I don't know how much you want to say publicly at this point, Mark, but he has big plans. I'll tell you that much.
Yeah, so one thing I'd love to talk about is SmartBCH. We're really excited about it as a company. I'm personally very excited about Bitcoin Cash, but also as a company now, this really gives us a chance to be very actively involved in building things for BCH. And basically, the advantage that SmartBCH has over, let's say, Ethereum and all the other sort of smart contracting platforms is that it's, I mean, frankly speaking, it's about 130 or somewhere between 80 and 133 times more scalable in terms of the gas, so that the transactions capable to be done per block. So the transactions per 10 seconds or 6 seconds, it's about 100 times more than Ethereum straight out of the gate. And I think the typical reaction to this that people have is, well, doesn't that mean it's super centralized? And you have this concern with things like BSC and Solana and lots of blockchains where they're highly scalable, but at the end of the day, maybe it's all controlled by a dozen people or something. And the advantage you have with SmartBCH is that the ability to validate transactions on the network is not centrally controlled by a foundation. It's not centrally controlled by a large exchange or something like that. It's actually based on your proof of work on the Bitcoin Cash blockchain. So because it's based on your proof of work on the Bitcoin Cash blockchain, it effectively ends up being, maybe not right now, but it effectively ends up being at scale just as decentralized as Bitcoin Cash, which is the most decentralized kind of network of miners in the world. So the end result is something that's very powerful for DeFi people to build on, because the end users might not care about decentralization as much as they just care about convenience, low fees, speed. But builders, developers, people that are building in DeFi really care about decentralization because their reputations are at stake. And so they don't want to build on a platform that, the rules are just going to change from under them because the creators of the platform don't like what they're doing or something. And we are a builder in DeFi. flexUSD is a stable coin that exists on Ethereum and it exists on the Bitcoin Cash blockchain, and we're looking to put it on other blockchains. And so as a builder, it's very exciting. But also what's exciting about it for us is there is no stablecoin in SmartBCH yet. And I think a lot of the big stablecoins are probably going to overlook this for a little bit. So I think we have a bit of an edge where for the next few months, we can probably be the only stablecoin on SmartBCH. And I think that hopefully, USDC got their lead over Tether. They're still a smaller stablecoin, but they're now tens of billions of dollars. USDC got their lead over Tether by really going aggressively into the DeFi landscape. And what we're trying to do with SmartBCH is go really aggressively into the BCH ecosystem and the SmartBCH ecosystem and get flexUSD popularized. And that, again, is just going to help our whole ecosystem of other products. So flexUSD becoming a multi-billion-dollar and eventually $10 billion plus stablecoin will just make interest rates much cheaper on the exchange, futures perp rates cheaper on the exchange, and it makes it that much more compelling to use the AMM because you're not going to be paying very much in interest to be long. And so it makes it much easier for people.
And where are we at the moment? We're somewhere in the ballpark of $100 million.
We just crossed 100 million. So
congratulations.
Getting there.
Yeah.
Thank you.
So the 0 to 1 is much harder than 1 to 100. So we're on the way.
Absolutely. Yeah. Yeah. The next 100 million will be a million times easier than the first 100 million. So yeah.
So right now flexUSD is redeemable for USDC. So when you take your flexUSD and you say, you know what, I want my money back in a bank. Well, it doesn't work exactly like that. You go to CoinFLEX, you convert your flexUSD and they give you USDC back. How you get from USDC to dollars in your bank is up to you. But yeah. I guess if you're going to go to tens of billions of dollars, you're going to start competing and maybe even eclipsing USDC. So you'll have to become a stable coin in the true sense of the word, where you're no longer redeeming for USDC, but actually redeeming for USD.
Maybe you'll just acquire USDC and use them as your fiat rails. So.
Maybe you acquire the US government. And
I'm
Flex
fairly
USD
confident.
is the method of payment.
Yeah.
I'm fairly confident we will have a fiat provider for redemptions of flexUSD into US dollars directly. So there's at least three different routes that are all sort of interested in that. And I think one of them is probably going to work out. So
we just have to
what does Flex stand for?
Flex, So CoinFLEX is a lot of people think it's just, flexing your assets and levering up, but it stands for Futures and Lending Exchange. So,
I learned something new today.
Yeah, it ended up being a mutual friend of ours actually was the one who thought of the name. So, but it ended up being pretty true. Lending, we were originally thinking of that with basis trading, and basis trading being sort of a proxy for lending, and repo and the way the interest rates work, and that kind of all ended up being pretty core to what we do at CoinFLEX. So
that's true. I spent the first month thinking that BitMEX was a Mexican exchange. So I think Flex is a slightly better name.
You mean it's not?
Yeah.
It's not based in Mexico? What?
Okay.
Yeah.
Well, I guess we'll kind of wrap this up with a call for everybody. If you haven't tried CoinFLEX, go on over there and give it a try. Get some flexUSD, put it in your Bitcoin.com wallet. You'll see every 8 hours the interest showing up right there in your wallet. Test out the automated market making they have over there. At some point, I'll try and make a little tutorial video to just show you how easy it is to set up one of those and the money that can be earned, and we'll go from there. So, anything else either of you guys have to add today, or is that good?
If anybody wants to do OTC, we're very good at converting fiat to crypto and other crypto to crypto and strange requests. Grapefruit trading, go to gfru.it. That's our website. And
I've known Mike for a long time. He's a fantastic guy. And again, earlier to the crypto space than myself. So he really has seen a lot and knows a lot. So I recommend him full-heartedly.
And you can see if I'm dead or not by going to ismikekomaranskydead.com.
Yeah. Okay. Well, that's it. Thank you, guys. If you find this helpful, share the information with a friend and give CoinFLEX.com a try, and Grapefruit Trading the next time you have an OTC request. See everybody next time.
See you.